Scaling Appraisal Nation was a tedious, time-consuming process because it has to happen on multiple fronts. Obviously, getting the business in the door, especially during the housing crisis, was an absolute bear for us. I would drive 3 hours to Charlotte every day, knock on lenders' doors, and say, hey, can I take you to lunch and tell you what we're offering? And they would say, oh, well, we have no business to even give you. And then I would say, okay, well, that's the best time to go to lunch. You have no business. Let me take you. And we would do this for years to grow that business.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey folks, welcome back to the show. Today's guest is a North Carolina-based serial real estate entrepreneur and is involved in the building and exiting of businesses. Please welcome Michael Tedesco. Michael, welcome to the show.
Dylan, thank you for having me.
It's great to have you on here. It's great to make the connection as well. We were talking before the show. I really like the Carolinas. I've had a lot of guests, investors, who are both living in the Carolinas and then also investing in the Carolinas, really tell me about how great of a place it is, and it's one of the up-and-coming markets.
It's been up and coming for about 20 years now. 1,700 people a week move into Wake County, which is Raleigh. That's been happening now for well over 20 years.
So it's not a new trend at all, just new to me. I do want to ask you, and one of the things that I ask guests at the top of the show is really, how did you get into the real estate space?
I like to tease everyone and say, ever since I was a little boy, I always wanted to be an appraiser. I think in life, we fall into what we're good at. And when it just so happened that I was a very young loan officer, I was a 19-year-old loan officer. I was very good at it. I became a bank manager. From there, I was moved into the appraisal management space, and I saw a company that I worked for doing it pretty well, and I said, I could do this better if I focused on small to mid-sized lenders and gave them dedicated attention. And that's what I did. I created Appraisal Nation in 2007. Me and two gentlemen walked up into my attic, and we spent the next 18 years building what would go on to be one of the largest appraisal management companies in the country. And in February, we recently exited that company.
Congratulations. I want to ask you about the inception of Appraisal Nation and also where you saw the opportunity. So from a background working in banks and as a lender, I'm imagining you saw, hey, this appraisal process is antiquated. Walk me through the inception of Appraisal Nation.
Sure. So for us, the original piece before, and I don't want to get into too much of the weeds, but before the HVCC and the Dodd-Frank Act and all the regulations of the crash that that inspired those rules in 2009,
Yeah.
before that, we saw that there was a need for small to mid-sized banks to have a service level.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
For appraisal management, so they wouldn't have to pay in-house staff to take care of their appraisals. There was a service that we could do where we could provide that. And that was the original thought process was this could be a cost savings model for a lot of lenders and banks if we created this service for them.
So up to that point in time, banks really were dependent on someone that was either in-house or that they worked with very often in order to do all of their appraisals.
Before the 2007 housing crash, there were approximately 25 appraisal management companies in the country, all built around a cost savings model for large institutional banks. So instead of Chase or Wells having to have a staff of 100 people manage their appraisals, they would outsource to someone to do it for them. I said there's a need here for smaller ones and to get the same level of service, and that's where we started the Appraisal Nation process. 2 years following the housing crash, the Dodd-Frank Act came out and required a third-party separation between the lenders and the appraisers, and that really exploded the appraisal management space to where it boomed to over 450 appraisal management companies.
I want to ask you about building this platform, Appraisal Nation, and then also too, for your advice for folks who may be, doing something similar nowadays, whether it's digital or scaling a business that requires a lot of labor and workforce, especially coming from a banking background. I'm imagining that you had a very specific way of going about things, but that also this was an emerging space, so you had to be able to pivot. Walk me through what scaling Appraisal Nation was like.
Scaling Appraisal Nation was a tedious, time-consuming process because it has to happen on multiple fronts. Obviously, getting the business in the door, especially during the housing crisis, was an absolute bear for us. I would drive 3 hours to Charlotte every day, knock on lenders' doors, and say, hey, can I take you to lunch and tell you what we're offering? And they would say, oh, well, we have no business to even give you. And then I would say, okay, well, that's the best time to go to lunch. You have no business. Let me take you. And we would do this for years to grow that business. This is a time-consuming process that took us years to develop.
So in building and scaling Appraisal Nation, lots of moving pieces, as well as having to do all of this in an emerging market, right? Where you went from 25 businesses across the country doing this to several hundred. Where were some of the pivot points along the way for you?
Yeah, it was a real challenge. You have the competition's exploding. We're trying to grow the appraiser market on our side, which, we had 26,000 appraisers in our network when we exited in February. So we were growing that, building appraisers, determining where they best fit which products, whether it's private lending products or consumer-driven products, commercial products. And then on the other side, one of the hardest parts of all businesses is getting the business. So
Right.
developing the sales, going door to door, knocking, working hard to build relationships. We did a unique process, which I don't know that could be repeated today. And that is, we literally built it one relationship at a time, one handshake at a time. We would go to conferences, shake hands, break bread, have dinner, build relationships. It's one of the reasons our retention rate was so high at exit. We had a 92% retention rate. It's just when you build long systemic relationships, it's very hard to have them leave when they become friends of yours.
I want to ask you about exiting Appraisal Nation. And then also, I know you're involved in so many different businesses. We were talking before the show here, AI, CRM, you've got a large STR portfolio. You're involved in private lending.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency, it's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
Um, in moving from Appraisal Nation into some of these other businesses, did you take any of the lessons learned and the approach, or is each one really totally a new adventure on each business?
No, Dylan, what I found, uh, and it may not be true with every business, but for the businesses that I'm in, whether it's our med spas, we're building gyms across the country right now. We Bucked Up, which is a great supplement brand. We're building Bucked Up Fitness. We have their brand, and we have our third party software, as well as our virtual assistants in India. Uh, all these things, which sound completely different, are really just widgets. And for us, if you focus on the process and you focus on the company and you focus on the people, that's really what dials that in for us. So that's kind of what we've done. Let's look at each business. Let's look at each process. Start with the end in mind. That's always the my key takeaway to anyone who asks me, is to always start with the end in mind, and then work backwards. Figure out the model from that working backwards, and then build a scalable, profitable business.
I want to ask you about building teams, staffing, and finding the right people, right? So this is critical in all of these uh, businesses that you mentioned. Certainly, I'm imagining med spas, you have a large brick and mortar and lots of workforce tied into the physical establishments themselves. But in all of these businesses, they require staffing. What's your approach to finding the right people, and then also to making sure that, you know, that they themselves feel rewarded and are staying long term as the business grows?
Well, yeah, absolutely. And again, when I say it's all about relationships, it's not just the relationships with your clients or your lenders, your customers in the med spa or your members in the gyms. It's relationships with your employees and your staff. That's crucial. Class valuation, I'm still working with them. They're the acquisition of Appraisal Nation. They are now the largest. With our acquisition, they became the largest appraisal management company in the world, and there's 700 employees. All 700 employees have to work together cohesively. So that's an enormous part. Knowing everybody's responsibility and role, trusting that they'll do their role. Even from a small company, one of the biggest pitfalls I find is owners not being able to let go and trust the people they hire to do their position.
Yeah, delegate.
So yeah, you have to not only delegate, but stop the micromanaging. So when you delegate, you have to trust that they're going to do it, and trust that they may not do it exactly the way you want it done, but you have to trust that the way they're getting it done is positive for the mission.
I want to ask you about building that trust, but then also having people take that ownership. I forget exactly who said this, but if you are the owner, you're gonna be going the extra mile, and in a way, it's difficult to trust people because you feel like, well, this is mine. I know exactly what I would demand out of people. Why can't they exactly match it, be it the same level of effort, the same level of output, and do things exactly this way?
Sure, because it's not theirs.
Right.
That's why. Um, and I thought that, look, I started a business when I was 29, and for the first decade, I thought the same thing. Why aren't they putting 16 hours a day worth of work in? Why aren't they working on Saturdays? And why won't they answer the phone at 10 o'clock at night? Because it's not theirs. And you have to realize, the level of responsibility commensurates to the level of work in a lot of cases. So when it's yours, when it's truly yours, and when you truly care about it, and when you truly want to succeed, you'll do anything to do that.
Right. versus the other.
Employee, right, employee's not the same.
I want to pivot a bit here. I know that you're involved in the short-term rental space. I'm a licensed realtor in Texas. I worked very much hand in hand with.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
Several fix and flippers, also a lot of folks who are involved in the STR space in DFW, Dallas, Fort Worth, also in San Antonio. Funny enough, Dallas, I believe, in large parts of it, no longer allows short-term rentals. But I want to ask you about being in the STR space. How'd you decide to get into the STR space? And then what's been your experience in short-term rentals?
You know, that's probably the gyms and the STR portfolio are probably two of my absolute favorite fun businesses that we have. I really enjoy that space for a multitude of reasons. A few years back, my wife and I came up with the model that we were only going to buy in places that we wanted to visit. Um, and because we have so much data at our disposal, when you're doing 1 million appraisals a year, you are a data aggregate, and we're able to look at data across every submarket throughout the country and determine which ones are really not only profitable but are forecasting for exactly what you said, legislation that's positive to the STR community. So for example, we love Nashville, but we didn't buy in Nashville because we knew that the legislation there was going just like Dallas, where the hotels were coming in, they were limiting STRs, so we held off there. We love the Outer Banks, but the Outer Banks only produces about 5.5 months worth of revenue, where the Smoky Mountains produce 11 months of revenue. So
Hmm.
we ended up buying cabins in Lions Landing is in Sevierville, Tennessee. Triple Mountains in Gatlinburg, Tennessee. So we find markets that work, that are successful, and that we enjoy going to.
I want to ask you about getting a little bit granular on the short-term rental space. The management of all these properties. Short-term rentals, I'm thinking Airbnb. I know there's a lot of changeovers. You have to manage cleaning. You also have to make sure you have good ratings because they'll boot you off Airbnb pretty quick if things go sideways. What's been your approach to management and to making sure that that everyone's happy in the process? The cleaners are happy, the guests are happy, and that you have a good rating on Airbnb.
So it's not just Airbnb. I know they're the largest platform. They're actually losing market share this year um, to the other platforms, and a lot of those other platforms are the property management companies directly. So what a savvy renter will do, they'll go on to Airbnb, they'll find a property that they like. Maybe they'll go to St. Augustine. We have a beautiful property there. Serenity at Surfside, and that's a great property on the beach. And people will they'll look it up on Airbnb, and then they'll say, "Oh, well, this is 4,500 for the week on Airbnb," and then they'll do a little Google digging and find out very quickly that Aventstay is the property manager. They'll go to them directly, and they'll save all those fees.
Hmm.
That is a very common tactic that a lot of renters will utilize to save fees. Because of that, Airbnb has been losing a lot of market share.
Gotcha.
To that point of your question, we use property management companies like the one I just mentioned, and a few others through our portfolio. We found self-managing the project is a very time-consuming and unrewarding process for us. It's worth paying someone the 15 to 20% to have them take care of it for you.
We are coming up on time here, Michael. I do want to ask you about the businesses that you're involved in, how you decide which ones to get involved in. I am a big exercise guy. I've done jujitsu, boxing. I love just being in the gym in general. I've been a fan of Bucked Up from afar and just love everything in the exercise space. I'm imagining you probably feel similarly, which is why you're involved in gyms, med spas, and supplements.
You
But
know,
then,
I've always been a real estate guy. I met Jeff and Ryan, who own Bucked Up, on a houseboat, and we had an amazing conversation. And the long and short was, you have all this real estate data, and at that time they were doing 700 million in sales. I think this year they did 1.1 billion in sales. And I said, what if we could take what you're doing and build brick and mortar to it? And thus Bucked Up Fitness was created.
Wow. Well, it's an interesting synergy there. I think from afar, at least, when I think of gyms, I think of it's a difficult business to get into. There's a lot of competition. It's also difficult to compete against people when it seems like it's a race to the bottom in a lot of ways for membership pricing and this type of thing. So to be able to do something that creates a niche that draws eyeballs, and that has a brand, I think is impressive.
We built a differentiator.
Mhm.
I think that's important in any business, is to have a differentiator. Our differentiator in the gym space is we offer free pre-workout. Because Buffed Up is a supplement brand who does pre-workout, when you come into our gym, we drop a scoop for free in your shaker bottle. So you never pay for your pre-workout. We don't race to the bottom. We're tiered right in the middle typically, but by offering a large differentiator like that, it gives a huge value.
Yeah, yeah. I mean, being a Texas licensed realtor, that was one of the things that I loved about Texas was there was this huge gym culture, but you had so many options. It was really what is one place doing? I'll plug this gym that I went to, Metroflex Gym, which is where Ronnie Coleman was training in Arlington. And just to be able to know that I was training in the same gym as former Mr. Olympia was mind blowing to me. So they had that draw. So to your point, if you can carve out a niche, in your case, we'll give you a free pre-workout when you come to the gym. That'll drive me there. We are coming up on time here, though, Michael. Where can folks go if they may be interested in learning more about the various businesses that you're involved in, or if they would like to reach out to you directly?
Well, Appraisal Nation, if it's on a real estate setting, Appraisal Nation, they can always find me there. LinkedIn, you can find Michael Tedesco on LinkedIn, of course. We are diversified. I think one of the best things about being a business owner is being in the background. So I don't advertise or put myself out there too much. My goal is to let my businesses be represented strongly by their brands.
Michael, thank you so much for coming on the show here today.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.